Welcome everybody to the CoWaCo. I remember you all. You have to what? Like, subscribe, and comment. All right. So, what we're going to talk about today. All right. First of all, we're going to actually start off and start talking about dividends. All right. So, Chris.
Yes, sir.
What you got to say?
Let's talk about some dividends. Ladies and gentlemen, for those tuned in, we appreciate you. Thank you. I am Chris. This is my business partner, Leroy. Welcome to the company Water Cooler. I want to start today talking about the importance of dividend investing or making at least some of the companies that you have in your portfolio dividend companies. So we're going to break that down next week in terms of the length of time a company has been given a dividend and the importance that means for the company's growth. But today I want to highlight triple M. That's MMM. That's the ticker symbol for the company. A lot of people, I think they 3 times over the pandemic. They actually, their stock went up 3 times. Quiet company, nobody pays attention to it. It's not a thing that, people are not, it doesn't make the news every day. But they have been giving a dividend now for a long time. And it's a pretty good dividend. The last I checked, it was 3.4, 3.5%, which right now was not beating anything, but it's still better than nothing, right? But once everything levels out and it cools down, it should match inflation. It should actually beat it by a little bit. 3.5, 3.6%. But I mean, right now, this year and the next, and maybe the following, we'll have to get used to higher inflation. And I don't know of any company that's giving, 10, 12% return every year in dividends, right? Because that's money that's coming out of the revenue of the company that they're paying back to the shareholders. So that pot of money that's made that year, instead of it going back into the company, it goes to those who invested in the company. And it's not to say that you can't take the remainder and invest it in the company, which obviously many companies do. But whenever you have to calculate all of your expenses, you have to calculate all of your overhead. Every company has overhead, even strictly online companies, you got to have a business set up where you got to have a telephone connected somewhere, right? Internet connection has to run somewhere in some air-conditioned building. So you will have some kind of overhead. But you take that profit that you make and you give it back to your shareholders. Typically, that's the majority of the money that goes back. That and paying your executive board, that's really where the money goes. So you want to make some money in life, become a CEO, a CFO, a CIO, a COO, and you'll see huge bonuses if your company is in the green or in the black at the end of the quarter, at the end of the half, at the semi-year mark or the full year mark, whatever the company gives dividends. There are companies, though, that have giving dividends. And so a lot of times what happens when volatility is high or when uncertainty is high, some companies will stop giving a dividend. One in particular was Ford. So Ford gave a dividend for some time. 2020, they stopped giving the dividend and they put the money back into Ford. This took Ford stock from $7.25, $7.30, $7.45 range, $7.45, not $745, $7.45. And the stock, the highest I saw it was 26 over the course of the next 18 months. So sometimes when you don't issue dividends and you put it back into the company, it takes the price up, which is good for somebody that got in at $7 and was able to sell at $26, right? That's good. That's not bad. But the importance of dividend investing allows you to take the money that you receive for believing in this company or knowing that this company will do well and putting it back into the company or throwing it back into your portfolio. So 3M is one of my favorites in terms of dividend investing because 3M actually, UPS is actually one that I really like for dividends as well. I remember when I first invested in UPS, obviously I invested before the execution date to receive a dividend. So that's the date that you have to have ownership in the company in order to receive it. It's the deadline. So if the wedding is July 15th, you have to RSVP by April 2nd. If you RSVP April 4th, you're not going to the wedding, right? So I RSVP'd on April 2nd before 5 o'clock. I could show up to the wedding on July 15th. So that's how it works for the execution date. That's how it works when you for dividends. And that's how also it'll work for stock splits. If you invest April 2nd by noon, when the stock splits July 15th, everything that you bought before then is going to be split, and everything that you buy after that is going to be a part of those new shares that the company split into. So that's you think about a stock split, you think about dividend investing, the terms the same there. So you got the execution date that you invest before in order to receive the dividend. So I invest April 2nd before 5, I'll get that dividend on July 15th.
That's what's up.
FedEx is also a good one too. I feel like any industrial company or any company involved with transporting things, dividends are pretty good. Waste management, I know, was another one, but I'm a 3M guy. UPS is also in my portfolio, but 3M and UPS for sure.
I like when he said FedEx.
Yes, sir. Yes, sir.
I'm FedEx guy.
Okay. That's fine. That's fine. Look, I like Brown. Okay. I like what can Brown do for you? I like that. That's okay with me. Brown can do a lot for you. It sure can. It sure can. But FedEx is good as well. FedEx is good. And there is, and listen, this ETFs with both of them in there, right? Because you're talking about the top two the top two logistics companies.
Yeah.
So if I'm going to have a portfolio, I'm going to put, and that's based around that. I'm going to put that. And I think the two of them, actually, I don't even want to misspeak, but they are, I know I can't think of the ETF right now, but the two of them are in an ETF. And they're the top holdings in that, 3 to 4% for both of them. And, I think the portfolio was made up of about 30. This ETF is made up of 30 companies. UPS and FedEx are 3 to 4%. And then every company after that is like 2.9, maybe 3 point something. But yeah, I appreciate both. I'm a fan of both, but my money stays with Brown.
With Brown, I got you. I feel you. With Brown.
Yes, sir.
Now they do have an ETF XLI, which is an industrial selected sector.
By the way, that's my favorite one. XLK is nice and XLY is not, but I like I'm an industrials guy, so I like XLI, and it might be XLI that I'm talking about, but because I don't think it is though. It might be, but XLI is my favorite. I'm just because I like industrial, so I like the workings behind the workings. Yeah, we all have Teslas, but what company is responsible for producing the cobalt to put in the battery packs? What company is responsible for the tires? What company is responsible for the hardware? I'm a hardware guy.
And actually 3M is actually in that ETF also too.
Yes, it is. 3M and ABBV, I believe. And they've been giving dividends for 50 years, I believe. I believe. ABBV. I believe so. But yes. Yes, 3M is in XLI.
Yeah, it's in XLI. And UPS is in there too.
Okay, that is
UPS the one is actually in that one also too. FedEx might be in this one too.
Okay. It should be.
So that's XLI. So, and also to piggyback off of what he was saying about those dividends, if you think about it, right? Dividends, it gives you a better kickback than you actually, again, putting your money in a bank or credit union savings account. So make sure you think about that when he was talking about the dividend. Your percentage that you will actually get back, it will be higher actually in those particular companies. I'm sorry, in the companies that are that gives a good dividend, that's been giving dividends back for a while. So instead of putting it in that savings account, think about those dividends, putting it in that. And a matter of fact, this is going to go into our next topic, which is talking about solid stocks.
Solid stocks. But
Solid
look, Leroy,
stocks.
before you do that, I
Go
know
ahead.
that you have a company that you really like their dividend. It's a company that you're very, very proud to be a shareholder in that gives a dividend, and they sell soft beverages. I believe that's the. Is that? Could you
Pepsi.
elaborate on that, sir? Okay.
Like you talk about Pepsi.
Okay. All right. Just soft beverages. Yes, soft flavored beverages. I should say.
And the thing about Pepsi, right? It what's amazing about it is it has different products, meaning like different products, like even though it has like a soft drink, it also deal with chips also too. you know and then you have where it also deal with, like, even though it's to deal with the soft drinks, it also deal with healthy drinks also too. So it kind of try to mix up its products of what is actually dealing with, which it makes a kind of like a diverse company. I know Pepsi actually came out after Coca-Cola, of course. But think about this sometimes. Whenever a company, like the first company that actually come out, that's not always saying that's going to be the best company, because that second company can actually learn from the mistakes of the first company and see where they can be able to actually improve. So I'm just going to throw that out there. But Coca-Cola and Pepsi are both good companies now.
They
They're
are.
both.
I mean, and look, they both have good dividends, right? So, I mean, that's another thing. But also, what you're talking about with offering soft drinks and chips, and I just thought about it. When you go to a fast food restaurant, what do they eat? What do they have? They either have Pepsi products or Coca-Cola products, right? So that's a partnership that's a partnership that Pepsi made. I know that. I mean, for me, it just seems like, from my experience, most restaurants are Pepsi product restaurants. Like they all, like, hey, we have this, we have that. I don't know that it's few. I don't know that it's many. It's a lot of restaurants that offer Coca-Cola products, but it's sort of like that. I don't know. It's not a battle. It's not a real battle. But you go into a restaurant and they either have Pepsi or Coca-Cola products, and so think that's another good. We'll keep talking about it, but that's the importance of partnerships and strategically aligning yourself with an institution. I mean, if you think about it, whatever your favorite fast food restaurant is, if you go there and the only drinks that they have available are drinks that they produce, maybe, I mean, everybody wants to be in-house, right? The goal at the end of the day is for everybody to buy everything from you. But it's certain products that have that brand name and that loyalty that you just can't get rid of. So, and we all know, sometimes you pull up and they say, oh, well, we only offer Pepsi here, or we only offer Coca-Cola. And you're like, man, I'm wanting the other drink. You know what I mean? And so just pay attention to those partnerships that Pepsi and Coca-Cola make.
Yes, that is true. What he's saying also.
Yeah.
All right.
Like if you only drink Dasani, you have to be aware that if the establishment offers Pepsi products, you probably will not get a Dasani, because Dasani is not a Pepsi product. So be mindful.
They do Aquafina.
Yeah. So
I think that's right. Yeah. So they actually do that.
Yeah.
Oh, I might be wrong. Hold up. Do they do?
Might be wrong. They should. I know Mountain Dew is Pepsi.
Oh, okay. No, don't quote me on that with the water.
Okay, okay,
Yeah, don't quote me on that.
okay,
Um,
okay.
uh, so, uh, but Coca-Cola does, you said discerning, right?
Dasani, yeah.
Okay, yeah. So don't quote me
Yeah.
on Pepsi doing the Aquafina. Don't quote me on that. But I know they
Is
actually,
Aquafina Nestle?
I think that's what it probably is. Yeah.
Okay. Because I know Deer Park is also Nestle. Just okay, got you. Dasani, Coca-Cola, Deer Park, Aquafina's, Nestle. Those are about the only three I can think of. And any of like your natural spring waters that you get,
Hmm.
a lot of them are independent. I mean, because here's the thing about water, and this is a financial channel, but you maintain all aspects of your life. In terms of health, and this is proven, you want to drink water that's close to you. So if you live in New York, you want to drink water produced in New York, or you want to drink water produced in that area. Having water transported from California, you'll be fine, but it's better for you to drink the water around you, drink the water near you. So, and that goes for fresh foods. That goes for fresh fruits and vegetables as well. If you're growing, if you have an orchard, if you have an apple orchard, you want to eat the apples grown where you are. Chipotle, I know we don't
Oh,
cut. Chipotle, they have a business partnership with farmers. Wherever
yeah.
their restaurant is, within 100-mile radius of that restaurant, that's where they get their produce from. So there's a reason why they're doing that, and not everything and not everything is monetarily motivated. But just in your personal life, just a suggestion: if you can get water, fresh fruit, fresh vegetables, fresh meat, get that from where you are, your local butcher, your local farmers, your local wells. Get that from them.
He's right. Now, also too, I did not know that Pepsi had owned Quakers. Oh,
Interesting.
they actually,
Interesting. Wow. And this was for how long? Because now Quaker is independent. Quaker is based out of Chicago. So, and I'm thinking of Captain Crunch cereal, obviously, but how long did they own Quaker?
um, and actually, I apologize also to go back. Pepsi
Oh, yeah,
does actually own Aquafina too.
they do. Okay, good, good,
Yeah,
good.
yeah,
Okay,
they do.
okay.
Let me see. How long have they owned Quaker Oats? That's a good question.
Yeah. I
Let's
mean,
see.
because wow.
You didn't know that yourself,
No. I mean, because,
huh?
and here's the thing, look, Leroy, when I go in the store, I look, I'm one of those grocery shoppers. I look at the nutritional facts because I need to know what's in the food. And
I
I
feel
look
you.
at, what if it's what's the company that owns the brand that I'm buying, right? If you go to the store and you just had everything labeled based off of ownership and, just the brand, the company that owned the brand, the cereal aisle would be like 5 names, right? The soda aisle, the chip aisle would be like 5 names. Orange juice, 5 names. Like, treat buying products like you treat milk. The milk in your grocery store, pay attention. When you buy the milk from your grocery store, I feel like most people are comfortable buying the store brand, whatever store that is, whatever grocery store. But when it comes to flavored drinks, juices, cereal, chips, every other item, right? Even
Mhm.
bread, now that's where people get particular. The store still has their own product of, they have their own eggs and they have the milk and the bread, they have their own, and it's produced locally. But
Right.
when you check out the milk says whatever grocery store. I don't know many people that buy. And honestly, I can't even think of a brand name milk because it's really only store. And then and that's the grocery industry is a very interesting one. So that could be a law or a deal or something. That could be something way beyond what I'm thinking right now. But that could be regulatory, right? But look at the name. When you buy Dove soap, that's Unilever. When you buy Axe body spray, that's Unilever. When you buy Irish Spring, that's Unilever. It's only when you start to get into the smaller, more expensive brands that you look on the back and it doesn't say Unilever, that you can go, okay, this company is independently owned. They're not a subsidiary or something, because Unilever is going to put their name, they're going to put that U on the back of whatever product it is that they own, whatever brand. But if you shop in the store and you were just shopping by owner, company owner, publicly traded company, the store would look very, very small. Very.
I see what you're saying there. That makes sense. Pepsi actually had bought them back in 2001. August 2nd, 2001. That's a long time, dog.
Did they sell it though? I feel like they sold it, because I look at the back of Captain Crunch now and it says it does not have Pepsi up. Like, are they still? I'm under the impression that they're still.
Oh, Captain Crunch. Now I don't know if they own Captain Crunch. It's Quakers.
Because that's Quaker.
Right? Oh, Captain Crunch is Quakers?
Yeah, it's the same. I mean, is it? I thought it was the same thing.
Oh, okay.
Or is it not? Because it could. I mean, I'm thinking.
Well, it says look, they still own Quakers.
They still own it? Quaker.
The Quaker
okay, so
Oats,
Quaker and
I know
Captain Crunch
for
different.
Sure.
Okay.
See, hold up.
Look, y'all know what I'm thinking. Okay, you got two generals that were clearly inspired by 1700s. Look, I'm thinking old white dude, white mustache with the U hat, right? And I'm thinking that's the same dude. Okay,
wow. It might be different. Let's see.
Okay, wow. I'm thinking that's the same dude. They just took the mustache off of one, put him on another box, but kept it there. Okay. This one is Sergeant Quaker. This one is Sergeant Captain Crunch. I had no idea.
Okay.
Sergeant Crunch and Sergeant Quaker.
Okay, they're two different.
Okay.
Let's see. Quaker Oats and you said Captain Crunch, right? Captain.
Right.
Oh, do you just look it up or something?
No.
Oh, okay. Okay. I was okay. Let's see.
Because it sounds, I mean, if it's not the same, it's not. But I know that Captain Crunch, here's why I thought about that. Because you're not just going to sell cereal. You're going to sell oatmeal. You're going to sell Nutri-Grat, you're going to sell nutritional bars. You're going to sell protein cookies, right? Like, I'm thinking of, if you're getting into the food game, you're selling more than just cereal, right? So maybe I was wrong at that. But if so Pepsi owns Quaker, the Quaker brand.
Yeah, Pepsi owns the Quaker brand.
Okay. But not the Captain Crunch. Two different generals. Okay.
Hold on.
All right.
It might be the same. Hold on.
It might be.
Yeah.
I mean, let me know.
www.quakeroats.com, and then it has on here dark chocolate. Hold up.
Does it have peanut butter Captain Crunch up there? You know, that's the most important Captain Crunch. The Crunch Berry is cool, but in certain situations. But you know, the peanut butter is standard for all of the people out there allergic to peanut butter. I don't know how you do it, but I get it. It's nothing. It's not a whole lot you can do to change that. You've been living your life allergic to it anyway, so you're probably not missing out on anything. But that's the standard. That orange box, that like dim orange colored box with the captain on front and the little peanut butter balls spilling over that bowl. But I could have sworn those were the same. I did. I could have sworn those were the same guys. So I'm gonna stick with that then. I'm gonna stick with that. Are they showing anything?
I'm trying to see now.
Okay.
Real quick here.
Okay. Because I'm thinking there is.
Yeah, it's same.
And
It's the same company.
It's the same.
Yeah,
It's the same. Okay.
Quaker Oats Company. Yeah. Yeah.
Okay. All right. So I was right. Okay. Two white dudes are the same dudes. Okay. Great. Great. Those are the same dudes.
Yeah,
Those two white guys are the same guys. Fantastic. Great.
Yeah.
I got it. Thanks.
So yeah.
Cool.
But it's still owned by Pepsi though.
It is. Okay. Okay.
Yeah, Pepsi actually owns.
So
Quaker.
I mean, so Pepsi has soft drinks, they have chips, they have cereal, right? And so what else do they have? Pepsi has a lot of stuff. So again, to your point about Pepsi diversifying its product offerings, there you go. Because someone who doesn't drink Pepsi soda may still buy a brand of chips owned by Pepsi or may still buy Captain Crunch cereal. So it's important to know that.
Yep, that is interesting. All right.
Yeah.
So now we're gonna talk about again dealing with solid stocks. And so, Chris,
Yeah.
got anything to say about it?
So I definitely, and really just to further what we were just talking about. So Leroy is looking up Pepsi owning this company, this chip company, this cereal company, this soft drink company, so on and so forth. The importance of investing in quality companies is their product offerings and, or business or service, their service offerings, right? So does Airbnb just offer homes? Can you get a townhouse on Airbnb? Can you get an apartment? I think they're working on that. Can you get a tiny house community? Can you can you rent out a mobile home? Whatever fancies, right? Whatever tickles your fancy. Can you get those things? So Airbnb is not just offering homes to rent. They have other things. They're offering different products. They're offering different services. So it's still, at the end of the day, style business, but they're offering different products. They're offering different services for these different types of properties that you're looking into. And then, hey, Airbnb might say, well, we want to get into the car game. They could decide, I don't know, right? I don't follow Airbnb, so I don't know, but they could say, all right, we want to start renting out vehicles to get people to the Airbnbs. We want to start offering our own cleaning services where we just put it in as a fee added to the thing. And so we'll become a hotel ourselves, this all-encompassing entity, again, where you're buying everything from us. But we're going to start with you just renting a room from this property. And all the services included, we'll pay the fee for that from the owner of that property. So when you invest in a good company, you want them to either be the best at one thing and good at a lot of things, or you want them to be good at everything. And it gets into the argument, it gets into the debate of, well, is it, do you want to know a lot about a little bit, or do you want to know a little bit about a lot? So if total we have 1,000 subjects on Earth, do you want to know up to level 2 for each of those subjects, or do you want to know up to level 10 for 250 of those subjects? So it just depends. But when you have a company that is constantly innovation is probably the most important thing about a company. where are they placing themselves in 10, 15, 20 years, right? Where will they be in the market at that point? If you could find an innovative company with solutions to problems that everybody has, then that's a company you want to invest in.
That is true. Now, I know we also mentioned on UPS and FedEx, also too. So again, these are, pretty solid stocks that have been around for a while. And if you think like FedEx, right? Even though it's into shipping, guess what else FedEx does? FedEx is into printing too, because they actually bought Kinko's, So if you think about it, even though they're in the industry of shipping, the other industry actually in printing, where you can go into like now it's called FedEx, I think like Office or something like that, but it used to be called Kinko's. So
right.
Whenever FedEx actually bought Kinko's, it pushed FedEx a little bit further now, so people can get full printing service right there whenever they come to the FedEx office set up, which was the Kinko's. So I thought that was a pretty good move whenever FedEx actually, took that leap to actually buy Kinko's.
And to add to that too, Leroy, FedEx, along with UPS and any other good transportation company, they have planes, they have airplanes. So what does that mean for them in terms of moving products? Well, they don't just have to move their products, and they're probably also in the energy sector as well, right? They're probably, and they are, I'm able to say as well, they are in there because if you think about it, they're electrifying their fleet. So they have to partner with companies that can provide these services, these products for them. So then maybe one day they can get it because who's shipping the batteries that they're going to use on the trucks that they're transporting stuff in? They are. These are logistics companies. So their job is to move things. So if I'm moving the battery for you, that's going to end up in my 20-foot truck, my 26-foot truck. I'm looking at a discount. I'm looking at a partnership. Like I'm not going to get charged full price. No. Right? Because I'm moving if I didn't get into that and I wanted to stay with gas powered, I'm still moving those batteries. I'm still moving that pack for you. But now I'm getting in that. Now you're talking about partnerships, and now you're talking about strategically I don't even want to say migrated, but strategically evolving your company forward. Now you're talking about, okay, FedEx in 20 years, FedEx in 30 years, FedEx in, and UPS here, UPS there, and you can see them with a future. So as long as you can do that and they're constantly innovating and you're making those strategic partnerships, you'll be fine. Perfect investment every time.
Right. And then so that goes back again. Now check out, these are solid companies that actually have good dividends. So basically with them actually, showing over and over again, basically off of the information that Chris actually just gave, when you're looking at it on a chart, you can see that they have continuously good numbers, and basically they're growing. And those numbers actually come from what you see on the chart. It comes from the financial. So even if you look at the financials, you can see that, okay, they holding it down. You know what I mean? So with them actually holding it down, so that even makes you feel comfortable to be able to actually, again, do that small investment that we always talk about, is put your money in there. You can do it every week.
Yes, sir.
Every 2 weeks, that $5, $10. If you want to do $20,
put it in there.
Put it in there. $3.
Yep. $3. Yeah. I mean,
Um,
it's crazy easy how investing, and I'm glad investing is so cool now. Like I'm really glad, because a lot of people for a long time are like, I want to get into it, but I don't know if I should because I don't know how I'll be perceived. Thankfully, now there are cohorts and groups of people that are like, oh yeah, investing, yeah, that's yeah, absolutely. Let me talk to you about this and that. It makes me very happy when I'm around family and investing is the first thing that gets brought up. Hey fam, how you doing? Love is, love, so on and so forth. And then we start talking about investing. I'm like, man, this is progress, because they're seeing, he is or she is seeing the importance of putting their money behind something that's going to grow, putting their money, and having a business is important as well. So not just investing your money, but investing in yourself. Yes, investing in you, that's the best investment that you'll make. But, you put your money in these companies because they're proven. They got the smartest people in the world running them, and they're going to make money. Okay, go ahead. Put your money over there. But then at the same time, you're working on your business, focusing on you so you can grow your business. And then a portion of that you make from your business, you put it over there with the geniuses again. Hey, I'm going to throw 25, 30% of my company's revenue into the market behind, guys running 50, 100, $200 billion companies. And I'm going to keep putting that in there. And you could even use the dividends that you get from that to maintain your business. But not, and when in times of hardship, when your business is doing bad, like, man, business is not so well right now. My investments are up, but business is kind of down right now. And so you can support your business with your investments. And then when that evens out, you can grow your business. You can keep that growing up. And then maybe, and then if it's something you want, one day your company will be listed and others can invest in that as well. And you just watch, rinse, repeat that, and you keep that cyclical. So that's the importance. So like I said, I know you a FedEx guy, and I love me some UPS. But both are good. Both are good.
Both are still industrial.
Yes, sir. Yes, sir.
All right. So now we're to the part where we are going to do our stock picks.
Yes.
So
you know what? I'm gonna go. So my stock picks for the week, I'm gonna go triple M, MMM ticker symbol, and I'm gonna go UPS because that is in my portfolio. And I'm also gonna go. I was gonna go 3 single shares, but I'm gonna go XLI for this because you made me think about it. Caterpillar, my favorite company. Caterpillar is in XLI. So is UPS. Boeing, I believe, is also in XLI. Yeah, FedEx is in it. Yeah, FedEx is as well. But I'm looking at just UPS. FedEx is cool, but I just like UPS. But I'm not. Listen, whatever company makes money, I'm not putting any emotions in it. If UPS starts not doing well, hey, what is FedEx looking like? So you do not invest based off of emotion. Invest based off of who makes you money. But I'm gonna go triple M for the dividend. UPS also has a good dividend, and I'm gonna throw that XLI ETF in there as well. Those are my 3 stock picks this week.
All right, so I only have 2 that I'm gonna go with. Okay. Which I already mentioned. Pepsi is one of them, and FedEx is the other one.
Okay.
And I'm with you with the XLI too.
Oh yeah. Yeah, and I looked at the 5-year chart for XLI. Mm-hmm. Over the past 5 years, XLI is up 80%. So no, it's not up 1,000% like some of these big tech companies or 10,000%, but 80% over 5 years, right? Where else can you get that kind of return? You know what I mean? Like that's amazing. You know what I'm saying? That's 16 point something percent a year. Like imagine investing $1,000 that first year and getting 16% back at the end just because you invested the money. So it's really like, investing is powerful. It's really powerful. But XLI over the past 5 years up 80%. I love it. It's great. They're only going to keep going up from here. UPS, Triple M, FedEx. We got to show love to FedEx too. And Pepsi, I know that's one of your favorite ones. So and that's a good dividend. So we rock with them as well.
All right, you all. Appreciate you all tuning in to the CoWaCo. And remember to like, subscribe, and comment.
All right. See y'all on the next one. We out.